All right. Hello, everyone. Welcome to Market Review with Thor. So we have a lot of work to do today, as market had a downturn for this Thursday or Thursday. So today's date is June 20th, and we had a very large range day. I would say, like from overnight session all the way to the low of the day. It was 412 points. And right now we gapped down, so tomorrow, I'm not sure. Don't take it for granted. Don't take it for good, but it could be another down day. But we'll get there. So let's take a look at what happened today. So first things first, market had a buy side objective. Okay, on the hourly, you'll see it better. So initially it formed a bearish divergence at the highs. This is the hourly chart, and then bullish divergence at the lows, which means now it has to deliver buy side in overnight session. Here's the buy side. During the overnight session, it delivered buy side, ran like overshot even more or less another 100 points, and rejected at some point and broke down before market opened today. New York session opened. So that being said, we had a dealing range from the low all the way up to the high. Okay, even though this is not a S&T high, this is a rejection, so you can take it from the swing high. Or if you still want to see a divergence, there is a divergence in between these highs here on a lower time frame, right there. That ES was making a higher high. This is not a divergence on this time frame though. It is perhaps the 5-minute divergence. Let's see. Oh, this is already 5-minute. Yeah, it's the 5-minute divergence. And before New York opened, so here, let me annotate the sell side. This is an hourly target, which means because it's an hourly S&T divergence, which means a large range day occurred today because of that. So let's take a look at what happened. So this is the hourly divergence, okay? Let's take a look at what happened. So before New York opened, which is this candle right here, I'll put it in the replay mode real quick. So this is 9:15 candle. So before New York opened, market was already violating the range EQ. Okay, that's the first sign of a potential reversal. Okay, not a pullback, but a reversal. And secondly, there was an end dog here, okay, which was never balanced. So as you can see, it never came down to end dog low or even CE and kind of consolidate here to rebalance this whole gap, because essentially this is a gap, basically like an actual gap, even though you don't see it on the chart. This is the open price, and this is 6 o'clock. I mean, that's the close price, and this is 6 o'clock open price. So there's a gap in between, which was never balanced. So it delivered buy side, but it's inefficient in sell side delivery. So that's another potential target, which is, I would say this is a low hanging fruit objective, by the way, because it's a very obvious drawn liquidity in a sell model, which is what we were having right before New York opened. We were in a sell model. But let's go back to the chart. I'm going to put the end dog here just so we can see it. Okay, so this is the end dog. I'll keep it here just so you guys can see it on the 1 minute, how it reacts off of it. Okay, so let's close this. Let's go down to the 1 minute. So here, there are a couple things before New York opened. First of all, there is an S&T divergence. It formed before the sell-off. This is the 9:30 sell-off, and it came with divergence. And before that, there is a divergence here. which is the higher time frame divergence. This is the 5-minute divergence. Okay, so what happens here is market sells off, right, at 9:30, and immediately after it was bought back, and now the buy side objective was completed, which means the low is a swing low now. Okay, from S&T high to the swing low. This is the new sell side, the short-term sell side. Okay. Now with the buy side delivery here, it is actually trading into premium of both higher time frame and the lower time frame dealing ranges. So on both aspects, it's trading into premium here. Okay. So let me delete the higher time frame dealing range, so you guys don't have to be concerned about it. So here, it became a turtle soup. There are a couple things going on, like for example, it completes the buy side objective, trading into this fair value gap on the 1 minute, all respected, did some damage, but respecting it. There's that. And then on the time frame, on the framework time frame, it is also trading into the last premium fair value gap here, which was also respected below CE. This is the last premium fair value gap. The significance of that kind of fair value gap is essentially you want to see a strong reaction, and you don't want to see any violations of that fair value gap. One violation, body closed, candle closed outside, above it, the sell side idea is invalid. Simple as that. Okay, there's no what if this, what if that. It's simple as that. The last premium or the last discount fair value gaps are or have to be the strongest ones. All right, because this is the second stage. Remember the market maker model. It's the strongest delivery. Okay, so it has to be the strongest. Now let's get back down to 1 and let's see what happened here. So here there are some, lower time frame. I think it was microsecond, but let's see. Hold on, I don't remember exactly, but I need to check yes here. I don't want to bullshit. Right here. Okay, I think there was a divergence if I'm not mistaken. On a microsecond though, it's not on the 1 minute. So here, these candles though. So here, this is on the lower time frame though. Okay, there is something going on over there. Perhaps it's either 30 seconds. Let's go down to 30 seconds. That's why it's hard to see, because it's not on the 1 minute. It's low-key hard to see. Yeah, it's 30 seconds. That is not a 1 minute S&T. Okay, that is a 30-second S&T divergence, you guys. Jesus, I overshot a little bit. All right. So if you're already anticipating a sell side delivery, that's a good sign for you to enter short, although it was on the 30-second. Where is it? Right there. Okay, 30-second bearish S&T divergence. Let's get back down up to the 1, and let's keep reading the price. So say you missed that, okay, like I did. I missed out too. Not that I could have traded today, because my Found Features account was acting up. So let's say you missed that information though. Okay, this is here. What do you do? So you wait for a displacement basically and execute on the displacement here. It's the first displacement. You can go short, target the short-term sell side, and leave runners for the ultimate target. Okay, it's the first thing. So here you have a new dealing range, short-term dealing range, which is, I'm going to delete this, which is this level, because it wants to sell, go to the sell side, right? You can take the short-term dealing range for this. Buy side was taken. Now this is your swing low, because buy side was taken here. This is your swing high. This is the premium fair value gap. But what's more important here is how that premium fair value gap acted. Like I said, it has to be the strongest fair value gap in that price move. Okay. Ideally, you want to see IFED just like this. But if it doesn't IFED and if you see a body candle close inside this fair value gap, it has to be below CE when you're bearish, and it has to be above CE when you're bullish. Okay. Now here's the clue. The candle at 9:56 traded below the range EQ, violated the range EQ. Okay. And this is the last touch into the premium fair value gap market, giving it the last opportunity for us to go short and go toward the south side. Okay, this is the first leg on the 1 minute, and then it lower resistance liquidity run all the way down into the target, but it was not done here. So let's see what happened here. So now let's delete all this information. Okay, I want to keep it clean. Now it established a new dealing range. SMT high, swing low, established a new dealing range. Now here, what happens here is basically market comes down, right, and starts to form a bullish move. Now the range equilibrium was failed, okay, but there is a reason for that. Now I'll show you what happened there. Let's go up to the ES chart. So as market moved higher, so initially I think there was so it formed equal lows. This you can consider S&T divergence, although it's equal lows here. This is divergence from this low. Bullish divergence, so you can expect a pullback, and the sell side was delivered. So going long in this fair value gap is a high probability fair value gap because this is ICT 2022 model. Where are you going to target? Where are you going to target though? You can do two things. Market will deliver towards liquidity or fair value gap, right? And if it's a sell model, obviously this was the target was a fair value gap here. This is your target. Okay, I do not trade this. Personally, I don't like to target fair value gaps, but market maker models have two purposes. One, liquidity, engage with liquidity. Two, rebalance the market, meaning the target is fair value gap. Okay, I don't like to trade it though. That's my personal preference. So it goes up there, okay, but at the lows here, you can see it forms a divergence. Okay, you can take this low too if you want to. There's nothing wrong with that. You can do this, you can do this. Either or is fine. Now what does that indicate is basically market wants to go higher. This is where you can trade OTE. If you're short and if you see a bullish divergence, wait for the OTE. Okay, I don't do that personally, but it's doable. This means basically after retesting the range EQ, it's IOF leading, it's respecting, yes, but as it goes lower, it fails to break down, so it's not engaging with sell side liquidity, so it's unwilling to break down, meaning market will pull back deeper, okay, or it's going to get into a buy model. Okay, so it delivers more buy side, goes for the OTE or deep discount. Now if I put the OTE levels, oh fuck, I don't remember the OTE though, hold on, I don't remember the levels. Oh, ICT market structure and OTE zones, maybe this will help. Yeah, how do I do it? How do I use this indicator? How do I use you? Hold on. I don't know how to use this. Okay, you know what? It's written here, don't be lazy. 618 and 786. 618 and 786, I said, I think. Here you can see it comes to OTE range, okay? I'm not bullshitting about this. If it forms a divergence at range EQ, okay, if it's not in the buy model, it's going to fail at OTE. It could be in a buy model, but we got to look into it deeper, okay? Let's delete, not that. CE. All right. So here, it could have been in like I said, it could have been in a buy model, but here's what happened. You have sell side here at SMT low, and you have a new dealing range up there, okay, right here. That's the buy side. This is the sell side. Okay. So even though it didn't form an S&T divergence up here, okay, later on along the way, it actually formed one. I think it was, not sure where it was, I don't remember. But it violated the range equilibrium. Okay, here, as you can see, it violated the range equilibrium. Price kind of stalled, ran for the buy side, but failed here. Okay, there is a microsecond S&T here in this level, which is deep premium, somewhere here, 30-second chart, and it goes for the sell side. Now in this case, this can do two things, okay? Because there was consolidation. The sell side delivery can be manipulation, meaning it could, because it manipulated here, accumulated here, manipulation. This could be a manipulation, then it goes for the buy side, or it is not a manipulation, it is going to keep going for the external here, okay? Now, how can you anticipate, how can you differentiate the two? First thing, what you can do is you wait for a structural shift. Basically, this could be a trap, this could be a V-shaped reversal, this could be S&T divergence at the lows, it could be anything. So here, as you can see, market did not hold the trap. It violated the last fair value gap, yes. Went up to the volume imbalance, yes, but immediately after it didn't respect it. So this should have been a trap fair value gap and it didn't hold it. Thus, it turned out to be a premium fair value gap. What do you mean premium fair value gap? If it's not a manipulation, where is it going to go? It's going to go for the sell side here. Okay, so you have to adjust the dealing range all the way down here. What is it? This is the last premium fair value gap, basically, right there. And it is forming, if I'm not mistaken, a divergence somewhere here. Yes, right about there. Okay, that is the lowest sell. Lowest sell, what I mean is not stage zero, but it's the lowest sell because once the S&T is confirmed after this candle close, your stop loss will be above S&T high, so you're getting the smallest amount of risk in points. Okay. Whereas if you, for example, enter right about somewhere here, you can do two things. You can put stop above here, but that's going to be risky. You can stop that because it could diverge there, or you have to put it up here, which is a very large stop loss if you ask me, 35 points. So the S&T divergence delivered sell side. Now let's keep moving on. Let's keep going. This is the S&T, right? I'm going to delete all of that. You can also use the old sell side as a breaker. So here's the old sell side. You draw that in line, in time. You can use this as a breaker as well. If it touches after it breaks down, it could be used for as an entry. Oh my god, my foot hurts so much for some reason. Alright, so let's keep going. I'm going to keep the S&T divergence here because that's going to be the swing high. So here, we have the swing high, market move lower at the lows. Let's go down. It formed a divergence. Now you have a short-term low. Which is basically a sell side. So you have a new dealing range from S&T high to the low. So what's the point or what's the objective of this S&T divergence? It has two purposes. Okay, one, take out the long-term or short-term buy side. Objective completed. The second, pull back. Complete the pullback. Where is it going to be? The pullback is going to be into premium. Okay, guys, I want to make this clear. Okay, in expansions or distributions, the same thing really. You're looking for engagement with liquidity. Okay, if you are trading pullbacks, you are looking for range equilibrium or premium to discount or discount to premium. Okay, that is the pullback. So this is also the second stage, by the way. So dealing range, S&T low, pull back into the range EQ, one setup for life, tags the short-term sell side. This is my favorite setup, guys, honestly, like, because it gives you the smallest amount of risk. It is very easy, okay, very easy to see, and it's usually the fastest move. Okay, this is a scalping model, usually, if market is not trending, so you enter very close to the range EQ. It doesn't have to be a limit order at here. It could. You can put your stop loss valve here, which is 24 points. Personally, I wouldn't do it, but if you're okay with 24 points, you can do this. Put a limit order there, stop above the OB, target the short-term sell side, which yielded 3.42R, which is decent. Or if you want further confirmation without entering with a limit order, which is usually what I do, you wait for the bullish order. This is a bullish PD area. You wait for that to get violated. Once it's violated, you can enter long, short. Here, this is the next candle. Let's say you immediately entered at the fair value gap. Let's be realistic, because we're all going to be doing that. We're not going to be entering like having the perfect entry at this high. So let's be realistic. So here, your stop loss will be, could be two things. Could be above this high. It could be range EQ. It could be above the oh my god, I can't speak. The up close candle here, we target the short-term sell side. This is the second stage or one setup for life. Okay, very fast move, goes for the sell side. I believe it also diverged before the sell side delivery. Yes. So here's another bearish divergence within the CE of the fair value gap. You can also turtle soup that SMT, or if you're already in, you can add more into your position. Okay, so let's keep moving on. Now here it's set another low, same deal, dealing range EQ, pull back, premium, and goes for sell side again. So this is the low, this is the sell side. This is also, you can consider this as second stage because there's no SMT here. If I flip this, I think it's Alt I, yes. You see that is one setup for life. S&T low, no S&T at high, the pullback, the sell-off, suspicious. Okay, the high has to be tagged, and tags it. So let me switch it back. Sometimes it's easier to see on the buy side deliveries because we've been in the buy model or bullish market, so that's why I just flipped it. But it's the same deal. One setup for life comes all the way up here. Okay, where does it go? It goes into the premium fair value gaps. Okay, right here, and it's respecting that either upper one. I mean, ideally, let's be realistic. You're going to be looking for the lower one because this is the last premium fair value gap. Does the damage with the wicks, bodies in closing inside, algorithmic delivery, goes for the sell side. Now let's take a look if it diverged there or not. It doesn't have to diverge, but let's see. Yeah, there's no divergence. Like I said, it doesn't have to do it. So then it comes down, so it takes the sell side. Let me pull up, yes. Want to know if it's, so here, it diverges. What does that mean? It means it sets a new, market sets a new dealing range or a new swing low, which is from S&T high. You can also use the swing high here because it's close proximity, all the way down to the S&T low, the bullish S&T. So here, as you can see, same deal. It literally happened 2 or 3 legs before. So bullish S&T divergence, rally, displacement is there. This is the fair value gap, and in that fair value gap, it diverges one more time. What does that tell me is So here, even though it's rejecting the range EQ from below, okay, what this means is it diverges. So it has to pull back deeper or it's a reversal, okay? It's either or. Now here, if it's a reversal, what is it going to do? It's going to engage with liquidity, which is here, okay? Because that's the S&T divergence high. That's the highest probability liquidity. It could go up here as well, but I'm talking about probabilities here, okay? So if you're, let's say you had a limit short here, you were anticipating second leg or one setup for live kind of trade. The moment you see that divergence, you have to collapse your trade, okay? Because that's what it means. It's basically market telling you that it's gonna pull back deeper or it's reversing. So it goes for the buy side, couldn't engage with the buy side. Let's see what happens with the ES. Apparently ES took it out. ES took out both highs and then diverged. Here's the divergence. This is a 5-minute divergence, okay? Never engage with the liquidity though. 5-minute divergence. Now what you're looking at is a 5-minute sell model. What do you mean by that? S&T low, you have a new dealing range, S&T high, it's the same level, so I'm going to keep this one, and you have sell side is S&T low. That's the highest probability target. If it breaks down more, you're looking at this one, okay? So divergence, displacement, this is a premium fair value gap. If there's an S&T divergence somewhere here, it could be taken. If there's not, you have to wait for the break below range EQ. Okay, let's take a look at the highs. So there we go. There is the 1-minute S&T. So you can take this fair value gap. Because it's not at range EQ, it's going to go down all the way down to range EQ or sell side. And here, let's see if it diverges again. So it diverges again from range EQ. So this is the premium fair value gap. Too much to talk about today, guys. So I think everyone needs to watch this video several times. Too much to go through. So it diverges from range EQ this time. That means that in terms of probabilities, sell side delivery is more likely than a one setup for life kind of delivery. Okay. So it forms the last premium fair value gap and diverges within. That's a short, target the sell side, and it's stalled here. Let's see what happened there. So both assets took the sell side. It didn't diverge, but it pulled back into the last premium fair value gap. What that means is this is let's see, premium fair value gap. This is one setup for life. You're targeting what? Short-term sell side. It delivered right there. This is one setup for life. This is the second leg, and then for some reason, okay, it failed to take out the external liquidity. Okay. So I'm going to delete all of that. Make sure to pause this video. Make sure to do these studies by yourself as well, because that's how you're going to learn. Okay. I can go over this all day long, but if you're not putting in the work, you're not going to learn. That's unfortunately the harsh truth. So after that second stage delivery, not second stage, second leg delivery, market rejected that level at this low, so it couldn't engage with the external, and it reversed very, very sharply. So we have a V-shaped reversal, okay, and this is the S&T high, the first S&T, and the second one is here, okay, V-shaped reversal. The first buy side S&T was engaged, okay, so I'm going to delete that. In V-shaped reversals, what we are looking at is we never want to be impulsive, okay? We're looking for something specific, which means V-shapes you always will cause displacement. So in that displacement, you disregard every single thing, okay? Until market forms a lower time frame, or whatever time frame you're looking at, in that time frame forms a bullish divergence. Okay, that's when market will be in a buy model. Okay, algorithmically speaking. So what I mean is you disregard all these PD arrays, okay, initially, then you disregard all these ones as well until it forms a divergence, which is right here. This is the very first S&T divergence after a V-shaped reversal. Now, it also happens at range EQ, comes down into the discount fair value gap. This is the last discount fair value gap. So everything ends up here. Everything is algorithmic, okay? It happens in this fair value gap for a reason. Then, what do? You long, short-term buy side, take partials there. This is kind of like second stage, second leg model. Then it took the short-term buy side and failed to engage with the actual liquidity pool up there, which is fine, which means you took the trade, the second leg trade, you paid yourself and got stopped at break even. I'll take it all day long. I'll take that all day long, guys. And the delivery was 38 points. Sounds like a good deal. Let's check the highs though. So here, ES didn't engage with the liquidity, and I don't see a divergence also. It just broke down. This is the last 10 minutes of the New York session also. It's pretty typical. It just broke down for whatever reason. But still holding the trap. Here's the trap. Trap fair value gap still holding, so I'm thinking high should be to get tagged. If it hasn't yet, let's see. I think it did. And then it could go all the way up here at some point as a potential buy side objective. But we'll see. Yeah, this one got, oh, it didn't get tagged. Wow. Let's see, what about ES? I wonder if ES tagged it. So it failed at CE of that wick. As you can see here, the CE failed, meaning this is engineered liquidity now. And ES also did not take it. And it broke down below the end dog, so yeah. Anyways, guys, I hope you guys enjoyed this. I hope you guys find this insightful, and I hope you guys study this, not just binge watch it. So for tomorrow, because we gapped down, I'm obviously not going to fight the trend here. It needs to consolidate for me to go long anyways. So what we have here is, I think we are in the 4-hourly or the 1-hourly sell side delivery, which means this is an S&T low. Okay, if you take the range EQ or range, we're below we're respecting the range EQ. So this is the premium portion of the BC. Okay, there's also like a little bit of hourly fair CB as well. So this is a BPR. It could go down, go up there, which makes sense. I wouldn't mind if it goes up there. But ultimately, I think we're looking for delivery down below at least 19,760. I'm not saying it'll be tomorrow, but it could be. As you can see today, it bounced off of 20K, which is a mental level, which is typical. Usually the initial reactions are fake. As you can see here, 20K, sell side delivered, but the actual move came after, so the same thing could happen here. On ES's side, so the hourly, you can also look at the 4-hourly, it's the same low. On ES's end, we have that dealing range low here, all the way up here. It tagged the range EQ and bounced from there. I'm keen to see what happens, what's going to happen here. You see that it touched perfectly and wicked at the discount fair value gap. So the sell side on ES is 5,462. On Nasdaq, 19,760. Um, so we'll see what will happen tomorrow. I'll be live streaming, so I'll see you guys tomorrow in the morning, and I hope my fucking founder account works tomorrow. Anyways, thank you for being here, guys. As always, have a great night.